welcome back to your weekly market outlook. This is for the 4th of March 2024. So let's take a look at last week. I don't think we have a lot of significant data from last week. Maybe we want to focus on a few things. Let's take a look at the core PCE numbers from the US there. It's at 0.4%. It's up from 0.1%. Previous number was revised down to 0.1%. But if we look at the breakdown in terms of the spending and earnings, the spending actually goes up. Earnings kind of went down a little bit, but kind of contribute to the core PCE growth per month would still be at 0.4%. RBNZ, no changes in terms of interest rate statement, remaining flat at 5.5%. Australian inflation number. This one here it's pretty much exactly the same as the previous one at 3.4%. This is lower than what the market consensus is at 3.6%. So we didn't see inflation pick up in Australia. And if we take a look at the Chinese manufacturing number, we are also kind of still hovering around the 49 number. The ISM manufacturing numbers from the US, that kind of dipped down quite a lot, 49.1 to 47.8. Weekly unemployment claims also picked up a little bit, so this is kind of a little bit of a hint in terms of what we're going to be looking at for this week. So that's last week's data. Let's take a look at this week. So in terms of inflation number, one more, I skipped one. The Eurozone inflation number, it was still above the 3% there. It's a drop from 3.3 to 3.1%. So very similar situation with the US number, which market was kind of expecting that it should drop below 3%, but we didn't actually see that. We kind of got the same number as the US inflation number there, 3.3% to 3.1%. Consensus was at 2.9%. That's for the core. The year-on-year CPI is actually slightly higher than consensus, 2.8 to 2.6% there. So the core CPI is still high for the Eurozone. Again, we're going to be looking at inflation numbers throughout the week. So we have the Swiss CPI on Monday, and then we have the Tokyo core CPI on Tuesday. We're also going to be getting comments from Governor Ueda on Tuesday. So this would impact how the Japanese yen is going to move. Obviously, market is still looking for hints in terms of whether or not Bank of Japan is actually going to move away from negative interest rates. Latest news or latest comments from Ueda basically means that they are kind of not quite there yet. So they want more data. They want to see wages kind of pick up in Japan before they actually start moving away from negative interest rate. That was comments from last week. So we are expecting the same comments to be repeated for this week again from Ueda. We have the Australian GDP numbers. Australian GDP numbers expected to pick up slightly from 0.2% to 0.3%. Rate statement from Canada, this is expected to remain flat at 5%. Obviously, we have the Chair Powell testimony this week as well. The FOMC meeting won't happen until the 20th of March, but obviously we're still going to be looking at hints during the testimony from Jay Powell there. JOLTS job opening numbers again expected to kind of went down a little bit from 9.03 to 8.9. Got the ECB interest rate decision. This is expected to be flat at 4.5%. We're not expecting anything new coming out from the ECB. Comments would still be more on the cautious hawkish side in terms of the comments there. All right, and then obviously this week we have the NFP numbers. It's actually very interesting to take a look at the NFP numbers here. Average hourly earnings is expected to go down from 0.6% to 0.2% growth there. It's kind of expected, coming off the holiday seasons there. But again, we might actually get a little bit of a surprise to the upside. Number could actually be higher than consensus at 0.2%. It could come in at 0.3 or 0.4%. The NFP numbers is expected to gain by 190,000. Obviously, if we take a look at the two previous NFP numbers, they were pretty high. And last month's NFP number, January's NFP number, so released in February, that was 353. That was pretty much nearly double than what the market consensus is. So looking at the number at 190,000 gain, this is pretty much a normal NFP gain, so we're not looking too much into it. End of the day, unemployment rate is expected to remain stable at 3.7%. I think this is still key to see if the labor market is still very strong in the US. So that's pretty much it. Data's for this week coming out for the forex market there. All right, let's take a look at the Aussie USD here. Again, we are kind of getting pressured to the downside. We have that resistance remaining strong at 66 cents. That's also going to be where the swing high is going to be located, as well as resistance 2 on the weekly pivot is. Right now, in terms of where we are on Monday, Monday open is pretty much at the weekly pivot. We have a little bit of a support there at about 65 cents, but the stronger support wouldn't come in until about 64.50. So we're still kind of range bound there. We've got resistance at 66, immediate support is 65 cents, slightly stronger support at 64.50, but the pressure is still there for the Aussie USD here. Now, Euro USD, very choppy. We're still bound by that resistance at 1.0850, 1.09. So far, we're still being capped by that level. We actually haven't had a daily close above 1.0850, but even if there's a close above 1.0850, we're still likely going to be capped by 1.09. We have a little bit of a sell side liquidity there, building up at about 1.08. So this is in a very tight range, and we're expecting a potential breakout to happen here. Any daily close above 1.0850 is likely going to be capped at 1.09, but any break below 1.08, we are looking for further pressure to the downside for the Euro USD towards 1.0750 and then 1.08. Again, the stronger support wouldn't come in until about 1.0650, 1.07. So if it does break that sell side liquidity, it could actually speed up really quickly to the downside for the Euro USD. The Pound USD, again, this one here is still within that Ishimoku cloud there, so very choppy. You can look at the chart there, really choppy trading here for the Pound USD, and we're not getting away from that. In terms of the resistance so far, we still have 1.27 acting as a strong resistance. Obviously, that's also where the resistance 1 is currently located. We have a slightly higher swing high there, but that swing high is still going to be below 1.2725. So key level would definitely be on 1.27 on the Pound USD, and for as long as it's still below 1.27, there might be potential selling that could happen around 1.27. Now, obviously, if we look at the stronger support here for the Pound USD, we are going to be looking at the support at 1.26. Again, any break below 1.26, we still have support at 1.2550 and 1.25. That's pretty much where the order block is currently located for the Pound USD. So again, this is still going to be very choppy trading for the Pound USD. Next up, we have the dollar Japanese yen. Dollar Japanese yen continues to still grind higher here. Right now, we do have a new swing low that's located about 149.20. That's also where the support one is located on the weekly pivot, but we'll focus on the 149. So we need a daily close below 149 before we can actually see deeper correction on the dollar Japanese yen, potentially towards 148, 147.50. But if we take a look at the current positioning on the dollar Japanese yen, this is currently within a rectangle. Any break above that swing high, or basically any break above 151, that's likely going to trigger further run on the dollar Japanese yen. We're still going to be capped by 152 in the near future there, but so far we're not looking at the dollar Japanese yen really weakening at this point in time. We're just consolidating in a tight range. There are still likely potential for this one to continue to pop higher. This time around, we're still aiming for that 152. So there's a lot of traders aiming for that 152. There's going to be a lot of profit taken around 152. But for now, this is more of a continual grind to the upside for the dollar Japanese yen. All right, next up, it's gold. This one here is very interesting. Taking a look at how gold just popped up higher here last Friday on that weaker manufacturing numbers coming up from the US there. This one here is currently being capped by 2090. So 2090 is going to be your key level. Obviously, beyond 2090, we have 2100. 2090 is the 127.2% Fibonacci extension on the daily time frame. We are now back above the Ishimoku cloud. We had a little bit of a change of character again that was illustrated there on the chart on the break on Friday. So we have kind of shifted up a little bit. We have moved from below the Ishimoku cloud to above the Ishimoku cloud, and there's a green box there. That green box is where the fair value gap that was created on Friday is going to be. So this green area is basically going to be our support area. Now the weekly pivot is currently located at 2065 to 2060. This is the CE of the fair value gap itself. So throughout this week, we're going to be looking at support to start building up from 2050 all the way up to about 2065 for gold there. And for as long as it's able to maintain a position above 2050, we are still looking for potential move higher here to test 2090 and potentially 2100 on gold. But yeah, there's been a little bit of a shift in momentum here. There might actually be even signs here that the trend might have shifted back to the upside for gold. But again, all the risk that comes to gold here depends on comments coming out from the FOMC. If they are being hawkish, if they remain hawkish, then it's going to limit further progress for gold there. And for gold to continue to press higher and potentially create a new historical high, we need confirmation from the FOMC that yes, they are looking at cutting interest rate earlier. But going by the Fed Watch tool that we have right now, pretty much about 97% of the market has move on closer to the dot plan from the FOMC. So this year we're kind of expecting about 3 interest rate cuts. That's about 75 basis points. And I think for once, market has kind of not tried to speculate for higher interest rate cuts. Market speculation right now is pretty much in line with the dot plan for a 75 basis points cut in 2024. So with that, good luck for your trades this week, and I'll see you soon.